So we just talked about some of the movement in the futures right now. I want to get a sense. How do you see today shaping up? What's your WEX word of the day?
So my WEX word of the day is reconciliations, Frank. And I think that Wednesday will start a process or a domino chain of reconciliations, if you will. I don't think we'll see a lot of movement. I don't think that there's any catalyst between now and then. I think this is what everyone's waiting for. And there are a number of things we have to reconcile. We have to reconcile in the face of what has to be viewed as disappointing earnings thus far, Frank, how we're going to continue to trade at 22 times. I don't see a negative 1%. That's what we have so far. And remember, that's below the dramatically reduced bar of 1.6% for the quarter, which is where consensus ended the quarter, having started at 8%. That, to me, is not fodder for a bull market. The Fed will have to reconcile. Is it going to be the 6 cuts next year or this year that the market is intimating, that the Fed Fund Futures is intimating, or is it going to be the 2 or 3 that they continually try and remind the market is where they're at?
Okay. Greg, I want to jump in just for a second. I want to put out two things for the audience. You are notoriously a bear. You switched a bit recently. You're notoriously a bear. And just a moment ago, we showed the audience the earnings number. What you're referring is to that -1 is the companies that have already reported. We use what's called the blended number. That includes actual reports and also estimates. You're focused on the actual, but for the street, for the most part, the real number is the number you see on your screen right now with EPS 4% above expectations. I just want to jump in. So go back to your point.
Yeah, look, and I'll quote with that. The real number is what we've experienced so far. And so that's all the reason why I use reconciliation as word of the day, Frank.
Okay.
We have to reconcile what we're expecting versus what we've seen thus far. And granted, the banks in that first week did a lot of heavy lifting on that negative number with some of the special charges. So I do expect the blended rate to be somewhat above this, as you're intimating. But
all right. So in all fairness,
the real number is -1.
In all fairness, you have some concerns about valuation, like a lot of people do. Right now, the S&P is trading at about 22 times. The tech sector alone at about 26 times. You also have some picks for us. So you're looking at what they're not picks necessarily. You're saying you would buy them, but you're considering them having more safety when it comes to earnings this season. One of your set of picks is in the cybersecurity area. Palo Alto Networks, CrowdStrike, and Zscaler. Why do you think that they're quote unquote safer when it comes to earnings as opposed to other companies?
Right, and much like I did last year, Frank, although like you're right, notoriously bearish, I'm always looking for ways where we can hide. I'm always looking for ways for the areas where we can have some exposure. And when you looked at last year, the obvious domineering behemoth companies in terms of the AI secular tailwinds, in terms of the cloud secular tailwinds, those companies were up 200, 300%. But there are companies that are just as important to those ecosystems that didn't have that type of performance, although they're starting to catch a tailwind now. And you mentioned the cybersecurity. They are just as essential to both of those ecosystems. They will put up relative earnings growth that will be vastly above the rest of the market for this year. And I think that as we start to reconcile some of those other things on a macro perspective, this is one of the areas that people are going to fly to safety.